Good morning investors, you are on KleverStock with me, Shomna, serving you the latest morning bell updates. Kicking off with the opening bells updates on our local market, the FBM-KCI held ground on Wednesday despite a sharp overnight sell-off of Wall Street red-rated global sentiments. The benchmark index opened 0.62 points lower at 1,613.44. but managed to stabilize around its 50-day simple movement average, signaling an attempt to regain footing after the pure section steep decline. The regional market also witnessed investors' unwound position on fear that AI-driven rally had overheated, while traders scaled back expectations of US Federal Reserve rate cut in December. CME Fed Watch data placed the probability of 25 basis points cut at 48.9%, slightly below the 51.1% likelihood of no change. In the local market, TA Securities said equities are likely to consolidate with a downwards bias given the absence of fresh domestic catalysts and fading prospect of near-term rate cut in US. It identified immediate support at 61.8%, the track level of 1,564 with stronger support at 50%, retracement level of 1,527 and 38.2% level of 1,490. Resistance remained at the December 2024 high of 1,644, followed by 1,648 and 1,695 as tougher upside hurdles. Malacca Securities said FBM-KCI is expected to remain soft following Wall Street slide, pending on immediate earnings release. It maintained a positive view on MI Technovative, supported by its strong third quarter financial 2025 result and growing exposure to fast-expanding semiconductor segments, including advanced packaging, high-performance computing, and automotive power modules. The brokerage also noted continued buying interest in plantation sector following the rebound in the crude palm oil price. It said Johor Plantation Group may be considered as its approach a potential breakout zone, while the IPO of Foodie Media Berhad, for which application closed today, also offer a revenue for investors with a target price of 47 cents. On Bursa Malaysia, Aquawark, the operator of Aquaria KCC, emerged as the most actively traded stock following the its debut on the ACE market after raising 114.3 million ringgit from its initial public offering. The counter rose 2 cents to 33 cents, with 124.47 million shares changing hands. Moving on to local currency updates. The ringgit opened stronger this morning as investors weighed growing uncertainties over the US Federal Reserve December interest rate decisions. At 8 a.m. today, the local currency firmed at 4.1570 or 4.1705 against the US dollar compared with yesterday close of 4.1605 or 4.1660. Bank Melombat Malaysia Chief Economist Dr. Muhammad Afizah Abdul Rashid said the US dollar index slipped 0.04% to 99.550 points as the market reacts to uncertainties over the interest rate decision by the US Fed next month. He noted that the latest US labour market data released after 41 days of the government shutdown shows initial jobless claims rising to 232,000, higher than the consensus estimate of the 223,000 and above the previous week of 219,000, indicating that it described as a weaker treasury. He added that most Fed officials appear mixed on what they will be deciding next when it comes to monetary policy in December. Dr. Afizam said the ringgit has been correcting after hitting the 4 ringgit 12 cents to 4 ringgit 13 cents range last week and closed weaker yesterday. However, he expected it to be stabilized between 4 ringgit 14 cents and 4 ringgit 16 cents today, noting that some technical indicators have gone into the neutral zone. At the opening, the ringgit strengthened against several major currencies, rising to 2.6726 or 2.6815 against the yen, climbing to 4.8138 or 4.8294 versus the euro, and improving to 5.4652 or 5.4830 against the British pound. Performance was mixed across ASEAN currency. The ringgit edged up to 248.1 or 249.0 against the Indonesian rupiah, and to 7.04 or 7.07 against the Philippine peso, but slipped to 12.8330 or 12.8838 against the Thai baht, and is slightly to 3.1940 or 3.2049 against the Singapore dollar. Continuing with national economy updates, the Employee Provident Fund (EPF) is continuing to post strong results, but economists said longer-term sustainability must remain the key focus. Speaking to the Business Times, University Kebangsaan Malaysia Research Fellow Muhammad Abdul Khalid said EPF latest numbers are impressive, pointing to 17.3% rise in new member registration and a 12% increase in new employees. But he stressed that the priority should be ensuring sustainable and steady dividends, especially as the contributor base continues to expand. Muhammad also highlighted the structural gap in retirement coverage. He pointed out that only 51.7% of Malaysia's 17.54 million labourers force contribute to EPF as September 2025. In other words, about half of the workers in Malaysia are not covered, he said, adding that greater inclusions of external to the strength of the nation's social protection framework. This comes as the EPF reported a 27% jump in investment income for the quarter ended of September 30th, reaching 25.07 billion ringgit. For the first 9 months of 2025, investment income rose 11% year-on-year to 63.99 billion ringgit, while asset under management climbed 12% to 1.37 trillion ringgit. Membership also contributed to growth with 427,329 new contributors continuing this year, bringing total membership to more than 16.5 million people. Over 9 million of them are active contributors, about 52% of the national labour force. EPF also added 62,401 new employees, raising its number to active employers to 628,321 as for the September 2025. Moving on to corporate news update, Malaysia is emerging as a top destination for global investors in Southeast Asia, reinforced by the strong 285.2 billion ringgit in approved investments record from January to September 2025, a 13.2% increase year-on-year. Investment, Trade and Industry Ministry Tengku Dato Sri Zafrul Abdul Aziz said Malaysia is not only competing within ASEAN but setting the benchmark, noting that 4,874 projects were approved across manufacturing, service and primary sectors, with an estimate 152,766 new jobs expected. He said the country focused execute of the new Industry Master Plan 2030 is drawing high-value investment while creating upscaling opportunities that support Malaysia's transit into knowledge-based economy. Bank Muhammad Chief Economist Dr. Muhammad Afizan Abdul Rashid said the trend is especially significant given to the global climate of protections. It shows that Malaysia has the right ecosystem for firms to invest and set up operations, he said, crediting proactive state governments and effective investment promotion agency. He highlighted integrated circuit of design park in Selangor and Penang as example of infrastructure's commitment helping Malaysia land semiconductor-linked investments, adding, I support we are in the sweet spot now. University Technology Mada Senior Lecturer Dr. Muhammad Hilham Muhammad Razak agreed the number signals rising as regionally competitive, but stressed the need of deeper structural meters before Malaysia can claim true benchmark status. He said Malaysia must compare itself against Vietnam, Indonesia and Thailand in areas such as actual FDI inflows, high-scale job creations, value-added activities and global collective rankings. Looking ahead to 2026, Ilham said Malaysia's investment outlook will depend on policy consistency, infrastructure improvements, cooperative energy costs, and its strategic provision with global supply chain alignments. But he warned that geopolitical tensions, rising global inflation of lower-cost ASEAN competitors, and gap in talent developments could temper the country's momentum. Finally, wrapping up, we have major corporate developments and deals across Malaysia. At first, we have Sunway Berhad's property arm. Sunway Property has strengthened its collaborations with low-carbon energy and service provider engaged with the expansion of the Sunway Square District Cooling System Partnership via their joint venture AG Sunway TCS Sdn Bhd. Next, we have Farm Fresh Berhad, a further cement its status as one of the Malaysia's leading dairy brands after being named Brand of the Year in Dairy Products category at 2025 to 2026 World Branding Awards at Osaka City Museum of Fine Arts. Next, we have Sarawak Coastal Industry Berhad, Volume 1 Subsidy, has entered into conditional of share sales of purchase agreement with YTS Cement Sarawak Sdn Bhd for its proposed disposal of its entire 100% equity interest in SCIB Contract Manufacturing Sdn Bhd for 113.0 million ringgit cash. Up next, we have CAP Plus Group Berhad, as scrap is proposed 3 for 5 rights issue price at 12.0% per share, citing downtrend its share price which has fallen 69% year to date. At last, we have EcoBuild Holding Berhad, as agreed to sell a price of freehold industrial land in Kapal Selangor for 5.7 million ringgit as part of ongoing debt reductions and financial reduction of effort. That's a wrap for Morning Buy Updates with me, Shomna on KleverStock. Thank you for choosing us investors. Stay tuned for the next live coming soon.